everybody, welcome back to my channel. So today I'm bringing you a new video and it is about assets. These are the things that we can actually buy to put money in our pockets and to bring us closer on our journey of financial freedom. It is a very long journey. It's not something that you just buy a few assets and then you become rich and you are able to lead your life the way you want to. It takes time, and as part of being a value investor, investing is actually a very long journey where it takes 20 years, 30 years, 40 years to actually get to the goal where we want to be. So don't be discouraged, because remember in a past video we were talking about how the magic of compound interest works in our favor. So the younger we start, the bigger the compounding effect is going to take place. So I'm excited about that, and we should all be really excited about that as well. So let's get started. The most simple way I've heard someone describe an asset before is actually like this. An asset is something that you buy that puts money in your pocket, and a liability is actually something that takes money out of your pocket. So there have been many misconceptions between assets and liabilities, and let's clear them up today. So let's start with this. A car is not an asset. And hear me out on this. The moment you drive it out of the driveway of where you purchased it, the value of that vehicle drops significantly. Meaning, if you wanted to sell that vehicle, you would have to accept a price that was much lower than what you actually bought it for. And yes, before you start shouting at me, there are exceptions to the rule. In the cases of where there are some cars that are very exclusive and there are only a few models made per year, those cars go up in value, but they are an exception to the rule, and that is a different type of asset. For the most part, all of us have motor vehicles that are not assets. Instead, they are liabilities, because they take money out from our pockets where we have to maintain them and we have to change tires and things like that all throughout the year. Or we pay a lot for petrol, so that takes a chunk of money out as well. We're going to talk about a few asset classes today. So the first one I want to talk about is a business. So when you own a business, clearly another way to generate money and put money in your pocket, and obviously this one takes active work. Actually, all of them take active work. However, businesses would be, I guess, more full-time in terms of activity, and Malaysians seem to be pretty enterprising, from anything from selling shoes, selling toys, selling cars. There are all sorts of businesses out there, and a lot of them are sendirian, berhad, or sole proprietors. Have a look around when you are out and about to see what kind of businesses are out there that might appeal to you, and maybe you want to start small and try your hand at a business, because if you make it big, there could be something that will put a lot of money in your pocket. Because when you're a business owner, your business becomes a big part of your life, and if you are not able to disengage from you and your business, then it becomes very intertwined, and you're going to spend a lot of time thinking of your business and how you can improve it and all these things you can do to tweak it, and it's just a lot. So even though it sounds very sexy to not work a traditional 9-to-5 job, being part of this entrepreneurial ecosystem, you're going to find that it is challenging. Second one is, I would like to say that stocks are my preferred asset class, because they are actually a wonderful way to earn more money just by investing in someone else's business, which they will run. All we need to do is to pick and choose which businesses we are comfortable with putting our money in, and businesses we trust that will actually grow us more value over time. So the price is what we pay when we buy the stock, but the value that we're going to receive in return, that is determined over time. And especially when you are a long-term investor, this is what we're talking about, the long-term effect of compounding and compound interest that is going to make us wealthy in the long run. So think in terms of 10, 20, 30, 40, 50 years ahead. So the earlier we start, the bigger an amount we're going to get. And obviously, you want to think of how much you want to commit when you are talking about your stock portfolio as well. How much are we committing each month into the stocks? And within stocks, there are a lot of different options for us. There is the do-it-yourself way, where you start out your own portfolio and you pick your stocks and you do all the work. There is another option where most people in the world globally go for as well. They buy mutual funds, and mutual funds are actually the same as a stock portfolio, and the difference is somebody else chose those stocks and are managing when to buy, when to sell for you. And I guess we'll get into it in a different video, because to fully understand that industry, there are a lot more intricacies, but just glazing over it, a mutual fund is an alternative for stock purchasing if you're not comfortable with buying your own stocks. But obviously, if you're not picking your own stocks, you are putting your money into someone else's hands, and they may or may not be doing the right thing for you. Think of the objective. What are their objectives as opposed to your objective? So your objective could be, I want to make money for myself so I can be financially free in 40 years' time. However, think of the fund manager and what their objectives are. It could be that, yes, they want to make money for the fund, but they are also not hugely incentivized to make money for the fund, because either way they're going to charge you a management fee and a sales charge when you purchase stocks with them. So I'm not purposely putting mutual funds down, but what I want to have here is a conversation about the reality of the situation. There are also exchange traded funds, which are just index funds that trade on a stock exchange. So an index fund is a fund that tracks a market's performance. So an example of this could be the Dow Jones Industrial Average, and the DJIA buys all the top 30 industrial companies in the US, the big ones, and it shows an indicator of how those companies are performing as a market. And the S&P 500 are just the top 500 biggest companies in the United States. And when we buy an ETF that tracks the S&P 500, we are basically buying all of those stocks in one. And there are ways to buy an ETF. You can buy it through a stock exchange. There are also now robo-investing platforms that enable us to do this. So in Australia, there are a couple, and right here in Malaysia, we now have one. There are also other asset classes that are, I guess, related to stocks, and those are bonds or bond funds. So I won't get into that today, but they exist. The last asset class would be property, and there are a lot of different types of property that we can purchase, such as commercial property, where they could be a shop lot or they could be in a mall. There are also residential properties, and there are different types. There are terrace houses, there are apartments, there are condominiums, semi-detached, many different types. And there are also industrial properties that one can buy, which comprise of factory land or even warehousing. So there are many different options there, and the thing about property is sometimes when we purchase a property, we are not buying it as an asset. I guess it's really up for debate, but when you're buying an asset, you want something that puts money in your pocket. And a house may or may not put money in your pocket, because if your rental yield does not cover or is not able to cover your monthly repayments to the bank in terms of mortgage repayment and interest, then that is not a positive cash flow vehicle, and yeah, it doesn't put money in our pockets. However, for property, they tend to increase in value over time. How much of an increase? Who knows? It really depends on many factors, such as how close you are to public transportation, what are the facilities or amenities near your house, such as schools, hospitals, and malls, and many more factors. So Another way to earn money from property is through capital appreciation, the increase in value over time. And we've all heard stories about somebody's grandparents buying houses for 20,000 ringgit and now they're worth 150,000 ringgit. So really good deal there. But at this stage in the economy, it is really hard to buy an affordable property, not just for investments but also for staying. So these are some of the things that we need to keep in mind as well. And I am definitely not a property expert, so don't take my word on this, and do your research yourself and find out if you can actually make positive cash flow income from renting out properties. There are also different ways to do this. Nowadays there's Airbnb, and there are people who are making good cash flow from Airbnbs, so it is doable as well. So I guess I'll stop here for today. I gotta go, and join me in the next video. I'll see you next time. Bye!